Hello, everybody. Hope you're doing great today. I want to say welcome to the introduction to trading options for absolute beginners. And in this course, we're going to cover everything that has to do with option trading. Um, the goal of the course is, to make it as easy as possible. The course is for beginners with zero knowledge of trading, designed to teach the basics of option in the simplest way possible. We'll use everyday example and easy to understand explanations to introduce the world of option trading to all of our new students. So in this course, what you will learn, you're going to learn the foundation of day trading, understanding core concept, terms, and tools needed for day trading. You're also going to learn chart analysis skills, the ability to interpret charts and indicators essential for day trading decisions. And trading strategies. We also going to talk about hands-on knowledge of fundamental day trading strategies such as scalping, momentum, and breakout trading. We also going to talk about risk management techniques, essential skills in managing risk, and potential captors, including stop losses and position sizing. We're also going to talk about emotional discipline, techniques to manage emotions and maintain discipline for long-term success. And lastly, we're going to talk about practical experience with demo trading, where we're going to have a demo account application to learn strategies in a simulated environment to build confidence before live trading. So that's going to be more like a demo account where we're going to walk you through and teach you everything you need to know before you can even start trading. And the course outline in module one, we're going to be talking about what are options and how do they work. Lesson 101, we're going to talk about introduction to options. Lesson 1 2, we're going to talk about the difference between options and stocks trading. We're also going to talk about two types of options, which is call and puts. In module 2, we're going to talk about, the terms in option trading, the strike price, expiration date, the premium. And lesson two, we gonna talk about in the money, at the money, and out of the money. These are terms you have to know. And 2.3, we also gonna talk about example scenarios to clarify key terms. So that's what we're gonna talk about scenarios. We're gonna get examples of exactly what happens, so you understand exactly how you can use these terms. And module three, we're gonna talk about how to buy and sell options, how to buy call options, how to buy ports options, and how to sell an option. And for module four, we're going to be talking about risk and rewards of options, how you can have a maximum loss and profit, managing risk when trading options. And we also going to talk about using options to protect your investment, which is basic hedging. In module 5, which is the last module, we're going to talk about how to start trading options with confidence, where we're going to set up a demo account for practice, place your first virtual option trade, and tips for starting small and learning gradually. So, guys, this is the outline of the course, and without further ado, let's get straight into the course. So, what is trading? Trading is the art of buying and selling financial assets with a goal of making a profit, right? So, once you sell any financial assets with a goal of making profit, that's trading. And these assets can include stocks, bonds, commodities, currencies, cryptocurrencies, and derivatives like options and futures. All right, so anytime I would like to define trading as the art of buying goods and services. So once you exchange goods and services, that's trading. You've traded right there. Okay, so for beginners, want to say what is trading? I would define it as the exchange of goods and services, or financial instrument for goods and services, right? And we have tools for trading. Traders use tools like charts, technical indicators, and news analysis to make informed decisions. Platforms and brokers facilitate trade. providing access to various markets. So we use a lot of things. We use tools like charts. We use the charts to analyze market movements, trends, and we also use technical indicators and as far as news to make informed decisions. Okay, and we also have platforms that we use to trade, which are brokerage accounts, and these are like our bank accounts. So we want to talk about risk and rewards. Trading carries a significant risk, and not all trade result in profit. A solid strategy and risk management are essential to maximize, are essential to minimize losses and maximum gains. Now we have key aspect of trading purpose. Traders aim to take advantage of price fluctuations in the market to make profit. Unlike long-term investing, trading often involves shorter time frames, from seconds to months. Types of trading. One, we have day trading, buying and selling assets within the same day, aiming to profit from small price movement. We also have something called swing trading, holding assets for days or weeks to capture medium-term price trends. We have scalping, executing very short-term trades to profit from small price changes. Position trading, holding assets for months or even years, similar to investing but with a trading mindset. Now, we're also talking about key aspect of trading, right? We talk about markets for trading. We have stock market. The stock market is where we trade shares of public listed companies. Like we have tons of companies, the Amazon, the Walmart, the Tesla, you name rest of them. These are companies that we own shares within. So whenever you're trading shares of public listed companies, you're purchasing stock, all right? You're holding ownership within a company. We also have the forex market. The forex market is where we trade currencies based on exchange rates, right? So the forex market is like currencies peers going against one another. Like it could be the USD going against the British pound or the British pound going against the Japanese yen, and you just name the rest of them. So that for forex. And we have commodities market, trading physical goods like gold or agricultural products, right? So it could be like we have gold. The price of gold is escalating right now, and everybody going to purchase gold. It could be oil, right? The price of oil is going up. Probably there's war somewhere, and other countries like are going down and the need that for now. So the price goes up based on events, based on news, right? So the price is moved by news, by events, right? And we have cryptocurrencies. So the crypto market trading digital currency like Bitcoin and Ethereum. So in the crypto market, what we trade is we trade digital currency like Bitcoin. If you ever heard about Bitcoin or Ethereum, they're crypto market. We talk about derivatives market, right? We trade contract like option futures that derive value from underlying assets. So a lot of times you hear people talking about, oh, I'm trading futures or I'm trading options. These are underlying assets, right? So you have to understand the difference. So we have five markets listed here, but usually we have more than five. But for beginners, you have to know five. And based on the five markets, you can select where it works for you, right? So module one, what are options and how do they work? So we're the goal of the course, we're going to be talking about options, right? So what are options and how do they work? That's the question. Option are special contracts that allow you to buy or sell something like stock at a specific price within a certain time, right? So when you purchase option, you're purchasing a contract, a contract of stock, and you're holding it for a certain amount of time, right? Stock where you can hold it as long as you want, but for options, we're just holding it for a certain amount of time. If the price goes in our favor, we make profit. If it doesn't go in our favor, we lose profit, right? Now, I'm gonna use a real life analogy, right? In this real life analogy, imagine you went about a video game, right? But you're not sure if you should wait for a sale. You could pay a small fee to a store to reserve the right, probably like how we do layaway, right? To buy a little at a current price. The difference between our options and a stock is this, right? Stock, we're owning a piece of a company. You're having ownership within that company. Option is like a contract that gives you the right but not the obligation to buy or sell a stock at a specific price. So if we're trading stock, we're having ownership within that company. So we want to make money if the company gains profit. We're gonna lose money if the company loses profit. For option trading, we do not have the obligation, right? We're not obligated to hold or to sell. We sell when we want, we buy when we want. That is if you think you're in profit. Now, the main difference is with stocks, you own a part of a company. With options, you only have the right to buy or sell without owning anything unless you exercise the option. Exercise means unless you sell the options, right? Now, we have two types of options. We got calls and we have puts. Now, what is call option? The right to buy the stock at a certain price for when you think the stock price will go up. Now, I want you to pick up your phone, for example. When you pick up your phone, it's what? Call. When you put your phone down, it's put, right? So let's use that analogy. When you pick up your phone, that's call. When you put your phone down, that's put. So in option trading, we have calls and we have put. We do call if we think the price of a stock will go up, and we do put if we think the price of a stock will come down. Hope that makes sense, guys. Now we're gonna go straight to module two. Module two, we're gonna be understanding key terms in option trading because it's very important for you to understand all these terms that are in option trading. We're gonna talk about strike price. We're gonna talk about expiration date and premium. What is a strike price? The strike price at which you can buy or sell the stock with your options, right? So the strike price is gonna be the price at which you can buy or sell the stock with your options. Now we talk about expiration date, the last day you can use your option. So if you say the option is gonna expire on the first is gonna be your expiration date, which is the last date you can use your option. And we talk about the premium. The premium price is price you pay to buy an option contract. So any amount that you pay to buy an option contract, that's the premium. So we got to know what a strike price is, the price which we buy or sell stock with your option. The expiration date is the last date you can use your option. The premium, the price you pay to buy an option contract. So remember, we said we have stock where we own a part of a company, and option is a contract that we own a stock for a certain amount of time, right? Now we're going to talk about what in the money is, at the money, and out of the money. Now, in the money, the option has value right now. For a car option, for example, stock price is higher than the strike price. And for a put option, stock price lower than the strike price. So usually you're going to see a line between, right, from the strike price. Once you see below the strike price, that's a put, right? Which is in the money. Above, that's out the money, right? So you have to know that. And at the money, the stock price is exactly the same as the strike price, meaning it doesn't have a long distance. So, for example, like if the strike price is $20, at the money it's gonna be 21 or 19. That's at the money. And out of the money, the option has no value. For a car option, stock price is lower than the strike price. For a put option, stock price is higher than the strike price. All right. Now, let's look at these examples, right, to clarify these key terms. Example one, you buy a car options for stock XYZ at a strike price of 50. If the stock rises to 60, option is in the money. right? From 50 to 60 is in the money. Now, let's look at example two. You buy a put option for stock ABC at a strike price of $40. If the stock falls to 30, the option is in the money because it's just $10 difference, right? Now, we're going to go to module three, how to buy and sell options. How to buy a car options. Step one, choose the stock you want to trade. Step two, decide the strike price and expiration date. Step three, pay the premium to purchase the car option. How to buy a put option. Step one, choose the stock you want to trade. Step two, decide the strike price and the expiration date. Step three, pay the premium to purchase the put option. How to sell an option contract. Selling a car option. You agree to sell the stock at a strike price if the buyer chooses to use the option. Right. Selling a put option. You agree to buy the stock at the strike price if the buyer uses the option. And module four, we're going to be talking about risk and reward of options. Remember, option has a lot of risk. So you have to always practice and understand exactly what you're doing. That's why we never risk what we're not willing to lose. Always risk what you're willing to lose. What you feel comfortable losing, that's what you always trade. So, maximum losses and profit. Maximum loss, the most you can lose when buying an option is the premium you pay. Maximum profit, the potential profit is unlimited for calls, but limited for ports. Managing risk when trading options. Risk management. Do not risk too much on a single trade. Only invest what you can afford to lose. Remember what I said? Do not risk too much on a single trade. Only invest what you can afford to lose. So if you're trading and you have like $300, do not trade more than what you're willing to lose. If you have 100, only use $10 to trade an option. That is like 10% of your portfolio. Only use 10% of your portfolio. Using option to protect your investment. Basic hedging. Hedging. Buying option to protect existing stock investment. Example, if you own 100 shares of stock and you buy the put option, you protect yourself if the stock price falls. Module 5, how to start trading options with confidence. We have to set up a demo account for practice. Step 1, open a demo account on platform like Thinkorswim or TD Trades, or you can also use Robinhood or Webull. Step 2, practice trading options using virtual money, which is called paper money in trading terms. We call that paper money. So always paper trade. As a new beginner, the first thing you want to do is to always paper trade and not to use your hard-earned money. You want to always paper trade. And you can use platform like Thinkorswim, TD Trade, Robinhood, or you can also use Webull. Now, placing your first virtual option trade, which is first paper trade. Step 1, select a stock. Pick a call or put option and choose the strike price and expiration date. So that's the first thing you have to do. You have to decide on which stock you want to trade. Pick the trade, pick if you want to do call option or the put option. The next thing you're going to do is to select the expiration date, the strike price, and then place in the trade. Two, execute the trade in your demo account. Now, tips for starting small and learning gradually. Tip 1. Start with a small amount of money to limit your risk. Tip 2. Keep learning, practicing regularly. So, guys, this was the end of this course, and I'll see you in the next lesson.